All right, welcome everybody to another exciting episode on taxes. So today is going to be, I think, a fairly short session. What we're going to talk about today is going to be about the importance of recording your deposits. So I'm going to give you some reasons why you want to do that, what they're going to be looking for, things like that, and as well as share a few stories, horror stories, with regards to people who did not do that. So before I continue, if anybody of you have any questions, please post them in the chat, and we will be answering all of your questions at the end of the session. And by all means, for those of you who are not listening to this thing live and cannot post your questions, yeah, I'm always very happy to receive your questions by email. So if you want to email me your questions, that works too. My email is on my website, or I can give it to you right away, which is jg.talbot@talbotcpa.ca. So we're going to get started. So the session today we're going to talk about is the importance of recording deposits, and it's not something that's talked about a whole lot when it comes to the reason for recording deposits, and everything related to your business. So this relates mostly to people who are self-employed, but really it does apply to anybody who is breathing and paying taxes. So for those of you who've had the experience of getting audited, the audit would almost always concentrate quite a bit of effort on expenses, whether the expense that you're claiming is really a legitimate expense, whether it qualifies, and things like that. And they're also going to spend a bit of time asking for proof of the expense and so on and so forth. But something that's happened quite frequently is that they're also going to audit your deposits. So what they are often going to do is ask you for all of your bank statements, and not only your business bank account, but all of your bank accounts. And I've even seen them ask for your spouse's bank account. So they're going to really check the whole spectrum of all the deposits, the joint account, personal account, and business account. And what they are trying to ascertain is whether or not you're really recording and reporting all of the revenues. So their testing is really quite simple. What they do is they go through all of what CRA does in their audits. They're going to go through all of your deposits and add them all up. So let's just say, for easy math, they add up all of your deposits and it adds up to $150,000. So the next thing they're usually going to do is says, okay, so we got $150,000 that came in all of your bank accounts. They will try to remove from that any transfers from bank account to bank account, to remove that from your deposits. But then at the end of the day, they're going to say, okay, so we've got $150,000 of deposits that are not transfers. And they're going to say, and we notice that your spouse is currently earning 30,000. So that means that there seems to be $120,000 of other revenues. But we noticed on your tax return on that T2125, which is the form that we prepare on your tax return, that you seem to only have 100,000. So what they're looking for is, where did the other 20,000 came from? And the problem that we have is keeping in mind that the audit may happen a year, 2 years, even 3 years after the fact. So you may not remember where all the money came from. So unless you've got a proper tracking record, you may not be able to fully defend where all your money came from. And what CRE will do is that, say you cannot, for the life of you, provide an explanation of where the 120 came from, they will simply jack up your revenues to meet the unreported revenues. So they're going to say, you reported 100, we think it should be 120, so we're going to make you pay taxes on an extra $20,000. And it's as simple as that. And next thing you know, you get a tax bill for the taxes on the extra $20,000. And what makes matters worse is that they will then also check your GST to see you've reported the same amount for GST, which normally you wouldn't. And they'll have you pay the 5% GST that you should have collected on the 20,000. So now not only are you on the hook for not reporting all of the amounts as taxes, but you're also on the hook for the GST. And if that is not bad enough, it's not uncommon for them to then assess penalties and interest on this unreported income. And the penalties can be very, very stiff. So we tend to tell our clients, look, you got to make sure you track all of your deposits properly. So that's where having a good bookkeeping system is extremely important. So Emily last week talked about different ways of keeping records. So go back and listen to that one again if you haven't already. But that's the thing you mustn't forget is that you need to record all deposits, not only deposits on your business account, but make sure you've got a good record of all monies coming in into any of your bank accounts. So I will tell you a couple of stories that I think will kind of make you understand the point that I'm making. So number one story is a client that I had who had a tremendous amount of business, and he would often pay his employees in cash. And so I recommended to this employee, well, don't pay them in cash because now you have no proof of payment. You can't pay them cash. Pay them by check. And this was before e-transfers was even available. So I suggested to him very, very strongly that he pay all his employees in checks. The following week, he goes, writes out checks to all of his employees, and they're not too happy because they preferred receiving cash. So what he would have them do is sign the back of the check, and then he would give him the check, and he would take the checks back and deposit that into his business bank account. 2-3 years goes by, Revenue Canada comes in, and they noticed that his deposits add up to nearly $200,000. And the amount that he had recorded as revenues was more like 120. See, he was shy by about 80,000, if my memory serves me right. But he could not for the life of him remember where that money came from. And he looked at his bank statements, and sure enough, it showed $200,000 of deposits. But his bookkeeping showed that he had only $120,000 of revenue. He says, look, if I had an extra $80,000, I would know it. And I would certainly show up in the assets that I own in the bank. I have the money I have in the bank. So finally, he was never able to provide CRA with good explanation. And it's only after they had reassessed him and nailed him, and he had gone bankrupt because of that, because the bill that he had received from CRA was in the $30,000, $40,000, $50,000, and he was already quite indebted. So that was just the ticket that he needed to get bankrupt. And it's only afterward that he remembered the whole check process of him signing the checks, depositing the money back into his account. So really what was happening, he was recording his revenues properly, but CRA had nailed him for $80,000 of revenues that he had never really earned. The other story is something that I've seen more than once, is where people will get nailed for unreported revenues. And what it is, it's they've sold a car, sold a quad, sold a boat, a snowmobile, anything like that. And they often will get cash for it, take the cash, deposit that into their personal or business bank account. And then 3 years later, CRA is asking them where this $20,000, $30,000 came from. And you would think that you would remember that, but if you're a little bit nervous and you're not thinking about these weird transactions, it could very well be you will not remember the $30,000 that came in from the sale of a snowmobile or something like that. So you're going to find, once you start really tracking all of your deposits, that there's a lot of money coming into your account that unless you record, you will likely not remember. So you got to be careful to track every sale of every asset, for example, reimbursement. So something I almost got caught on, and then luckily I picked up on, is when I would buy a gift for my mom, for example, I would buy, say, a $700 gift, and then I get my brothers and sisters to reimburse me $100 a piece. But I would deposit that into my bank account. Now, 3 years from now, I probably wouldn't remember where that money came from unless I had recorded it. And luckily, I always do. So reimbursements of gifts that you might buy, or just something you bought for somebody else. Now they're just reimbursing you. The other thing you got to be careful about is if you're giving a loan out. So you lend $20,000 to your child, and now your child is making $1,000 a month payments. Then at the end of the year, next thing you know, you've got yourself $12,000 of deposits that you may or may not remember because you did not fully keep track of where the money was coming from. So basically, the moral of this session is only keep track of your deposits. Every deposit that comes in, whether it's personal, business, just make sure that if anybody asks where did the money come from, you're able to provide them with very detailed records of where every dollar came from that was deposited into any one of your bank accounts. So that's all I've got to say. Are there any questions, Kayla?
Hey, Shungi.
Hi, Kayla.
That was a pretty crazy story.
And true.
Yep. So what's the best way to keep track of deposits?
So really, it's really quite simple. And you can pick whatever format you got. What I've always done is, for those of you who have been banking since forever, you probably had deposit books. So we are continuing to use deposits book, even if sometimes the deposits are made by transfers or something like that. But having a deposit book of some kind that you may not even give to the bank, I find is a good way. But any kind of paper that you can record these things on. So if you can get into the habit, you make a deposit, and before you make the deposit, you should have a piece of paper that details all the checks that you receive or all the amounts that you receive. And if it's cash, where did the cash come from? So the cash came from the sale of the tractor for $3,000. Put that on your deposit slip, and then have that deposit slip add up to the amount of your deposit. So that if they ever audit you, you can say, well, I've got a $6,000 deposit, which is comprised of these four amounts in cash and so on, adding up to the $6,000.
Right on. That's great advice. What kind of information do you record when you track your deposits?
Not a whole lot. It's not necessary that you have tons of details on your deposit slip or in your own records. What you really want to do is something that will jot your memory at the very least as to what it is. So if you sold a quad, you don't need to put down the name of the person who gave it to, although if you do, fantastic. But basically, if you can just report on your piece of paper, received $3,000 for the sale of a boat, paid in cash, and therefore that amounts for the cash that was deposited. Basically, what you want to do is that if CRE comes along and says, we've got $30,000 of unreported income, that you can easily go through your papers and your slips or whatever you have as far as record maintenance. And more people just do it on computer. Why not? It's so much easier, even if it is personal. But on there, you detail every dollar that you ever got, where it came from, and what for. So then they can see, well, okay, this is money you earned when you were in Vegas and you won the big $10,000 lottery, and whatever else you may have on there, inheritances, and put down the source of the revenue so that CRA can then see that the 30 or 20 or whatever amount of thousands of dollars that you seem to have not reported is in fact tracked, and you're able to provide an explanation for it so they can see it is in fact non-taxable. Because that's really what you want to do, is just show them that every dollar that was taxable was reported, and every dollar that was not reported is tracked and proven to be non-taxable.
Right on. That makes a lot of sense. Looks like that's all the questions we have for this. Oh, you know what? One just came in here. Let me just have a look.
Okay.
So Dinla is asking, when paid in cash for random items, but no receipt if you sold it personally, like a garage sale, do you need a description of each item or just a note stating garage sale income? Is that good enough?
Yeah, garage sale income would be good enough. So that's what we would often do if we have a garage sale. So now you got $3,000 coming in. I would just put $3,000 from sale, and I would probably just detail not every item, but what was sold at the garage sale. So old furniture, old clothes, shoes, whatever, and just put down as to what is the nature of the garage sale, so that they know it's just personal items that you're selling and not business services or products. So that's all you really need, and that would be good enough. Not a whole lot of detail.
Okay. That looks like all the questions at this time.
All right. Okay, so if that's it, then we'll conclude the show. And like I said, if you have any more questions, by all means, do not be afraid of emailing me, and I will be glad to do my best to give you the whole scoop on by email. All right, we'll see you next time.